because those are the options that are always liquid and you can deploy a market order there. Whether we can deploy straddles and strangles, long or short, I want to enter the position when the super trend is hello everyone, welcome to our YouTube page. Today we are going to learn something a bit odd that is going to be beneficial to you if you can deploy it with your logic. So here we are going to try and find out whether we can deploy straddles and strangles, long or short, depend on based on indicators. So here I'm going to use two indicators that are of my preference, that is EMA and super trend. So you can use whichever indicators you want, but it is one thing is important that you have to note is there should be one EMA that is stronger and that is faster, another EMA that has a bit of a lagging indicator and which is a bit slower. Because once one indicator gives you a breakout, the other indicators. So we'll see from the chart how why there should be one faster indicator and one smaller indicator. First, we'll make the strategy. The position, I'm going to choose both. You can choose either of them. Interval, I'm going to trade for the 15-minute time interval, the candlestick. I want to enter the position when the super trend is when the uh, closing price closes below the super trend, above the super trend, sorry. This is a bearish signal, so it will be EMA that crosses above the close. And we'll run this. I'm not looking to add a stop loss or take profit for the strategy that I'm deploying right now, but I want the stop loss and take profit for the option strategy that I will deploy. So we'll look for how it is done through KEEV. We'll backtest it with the Nifty futures and the Bank Nifty futures, because those are the options that are always liquid and you can deploy a market order there. I want the position for intraday. And we'll run the backtest. So till the backtest result come, let's take a look at the charting tool here. Here we'll see the Nifty and so we'll see the Bank Nifty futures with the super trend and the 13-minute EMA that we are going to see. We are going to deploy here. Bank Nifty. We'll add our indicators here. So as you can see, Bank Nifty is currently live because the market is still ongoing. DMA to be 13 minutes. So here, as you can see here, this is an important signal for us. For example, let's take a look at this. So when the super trend has crossed, when the price has crossed above the super trend resistance line here, so we might select a put sell here to get the exposure to the bullish position. So when we do a put sell, for example, the closing price here was approximately 44,300. And if we say I want to sell OTM put, that is ATM plus 2 or plus 3, that is 44,000 put or 44 or 43,900 put. So that will be sold here. And the put sell position will be approximately, as you can see on the right hand side of the screen, the 44,100, 44,200. Approximately this level we'll be selling our puts. This strike price will be selling our puts. And so after this is done, we can see that after for a short position, we can see this candle. So here, this candle has triggered a short position by closing below the 13 EMA. So as you can see from the close here, that is approximately 44,300. We can deploy a call sell position here to get the exposure and to hedge our downside risk here. And for example, we'll take OTM3 or OTM, that is ATM plus 200 strike price, that is approximately 44,500. So as we can see from the right hand side of the screen, we'll be taking exposure of taking profit for the call sell as till the closing price is below 44,500. And as we already have a put sell position here of 44,100 put sell, we'll be gaining from this range, as we can see from the chart here. And let's see what our backtest results show. Hopefully here you understand why one of the indicators should be a bit quicker and one of the indicators should be a bit slower. So here we can see that the backtest results are not that good, but the win ratio is very high. So the win ratio is going to help us. Win ratio basically tells us that even though we are making a bit of loss, but our idea behind the trade is right. And let's say, for example, we are trading virtually here. To show you an example, the strategy should be deployed for a day. The ATM should be dependent on the futures because as we saw on the chart earlier, it was the futures chart. And so this is basically the buy and sell side of the trade. Here we'll see that if the buy signal has been triggered, that is the growth, the super trend has been closed, then we'll basically sell the put that will be ATM, let's say plus 200. And here for the sell, so similar ideology, just the call and two here. We don't want to have a stop loss or take profit of the individual legs, but we want the same for the entire strategy. So for that, we'll toggle here and click on yes. And here we'll put a stop loss or take profit based on the absolute value of the PNL of our strategy. That will approximately, let's say, 3,000 intraday. And stop loss will be approximately 1,500. So basically, we are looking for a 2:1 risk reward ratio trade. Here we'll be selling one lot of put and call as and when a buy or sell triggers are buy or sell legs are triggered, and we'll run virtual or run live based on the strategy that you're deploying. And so this is a way in which you can get exposure to straddles or strangles from the indicators that you are deploying on your strategy. Hopefully this video was helpful to you. Looking forward to catch up with you all in the next video. Thank you.